when we're looking at the net profit of our business, we're looking at it in a holistic view. We're looking at the whole picture. So we're going to look at things like the total revenue or the total income that we're making. So if you've got multiple products or services, we want to look at what that total gross income is for those items are there. And then we're going to take away our total expenses. Now this is different to gross profit. So gross profit, which I did in another video, is we're talking about a snapshot view of a product or service where we can check the viability or the profitability of that individual item. In our net profit calculations, our net profit view, we're looking at the whole business and how all those little segments impact the business as a whole. So our total expenses will be things like your cost of goods, like we discussed in the gross profit calculation, but it'll also include things like wages, rent, overheads, marketing, operational costs, all those kinds of things that, including taxes as well, all those things that add to the expense of running or operating this business. So, and you can do that again, monthly, quarterly, or annually, depending on how much you want to track and monitor your business. Obviously, the more frequent you do it, the better chance you have of tracking the expenses and what the operational costs might be, and you can track how you're doing revenue wise. So let's look at an example of how we calculate the net profit. So let's say we had a total revenue of $350,000. Okay, so that's pretty good coming in there. Then we had our cost of goods out of that. If you remember our gross profit, we had a cost of goods. Let's say those are sitting at $50,000. Then we want to start looking at the other types of costs. Now these could be varied depending on your business, so I would encourage you to take some time to really map it out and look at all those costs that are impacting you: rent, vehicles, all those stuff. But let's just say, for the sake of it, for this, we'll say our salaries was 70,000, so that's the cost of goods. That's our salaries. Then we're going to say our operational items was 25,000. That's operational. Now again, I've grouped that all together, but what you would be best off doing is to break that down to each individual cost in that aspect. And we're going to say that we have taxes of, say, $5,000. So that gives us a total expenses of $155,000. So that's our total expenses for this exercise. And so if you look at our net profit, we're going to take away our total expenses from our net profit, which is going to leave us $195,000 of net profit, okay, which is great. That's not too bad. Now, if we want to look at our net profit margin, which gives us a percentage value that we can look at to check the percentage viability, how we do that, there's a formula that we use for that, and that is we get our net profit. So it's our $195,000, and we want to divide that by our total revenue, okay, which in this case was the $350,000. We're going to multiply that by 100 because that converts our decimal into a percentage. And in this case, that gives us a net profit margin of 55%, right? Which is, again, that's pretty good for a business to bring a 55% net profit margin. Now, the advantage that we have of doing all this is we can really, once we break down, say, those operational costs, we can really see where is it costing us too much money? Where can we start maybe saving on some of these operational costs? And we look at maybe our salary base, and we might figure that we need some additional people now to deliver, or we can maybe outsource certain items. So where can we make savings? Tax, unfortunately, is one of those things that we can't really avoid, but there are ways to minimize it. I recommend talking to your accountant about the best way to do that. So when we break it down, we see that we're sitting at a 55%, but how can we maximize that? What can we do with our revenue that we can up it? So looking back at the gross profit video that I did where we talked about how we can break that down, look at advantages of how to build up that revenue and that profit margin there. So when you break it down, you get to really see what the impact of this business is. So $350,000 looks great on paper, but when we really break down all these costs, in this example, it comes out pretty good, but in some examples, it can come down really bad. You might end up with a, net profit margin of only 20% or 15%. In that case, you've got to start looking at, wow, what am I doing wrong? What can I improve on? What can we do better with? So go ahead and try that with your business. Have a look at what you're doing. If you haven't seen the gross profit margin video that I've done, have a look at that to help you break down how we can maximize your net profit at the end of the day, and then work out the calculations on your business. Itemize all the operational expenses and the other expenses that you have, and get a really clear snapshot of where your business is sitting. You'd be surprised maybe of the gaps you can fill. You might be surprised at where the leaks are in your business, and you can come up with strategies and ways to fill those and build your business up and make it more profitable.